Hi, I'm Nasa. POIs in the chat, please. And if I get choppy, please do let me know. I'm going to start my speech in 3, 2, 1. Two arguments from opening government. Firstly, on why innovation is likely to happen far more. Secondly, why this puts pressure on pre-existing companies and the monopoly of companies like Tata, and why we think this is massively good for both the people and both for the workers within these companies. So firstly, why does this make these startups far more? So firstly, before on like a few points of setup, right? We think firstly, they're going to talk about risk of these innovative products or risk of these startups in the first place. Why do we offset this? Two things. Firstly, we're able to include things like monitoring that can happen and mentoring that can happen before these venture capitals to these startup companies in the first place, right? Notice that they have massive incentive to do this properly and to cooperate with these startups companies at the point in which their revenue depends on this company succeeding. And therefore, it's likely to be a balanced check mechanism of how the company is doing in the first place. But secondly, we think a selection process is likely to occur at the point in which many people come up with ideas and go to these venture capitalists. The ones that are likely to be selected are the ones that are likely to be, for example, most successful, the ones that are most planned out, the ones that have the most process of succeeding. And therefore, we offset the risk that they say and we prove massive risk. We get massive benefits on our set house. Even, however, at the point in which there is some risk, we see the benefits of creating innovation, the benefits of creating massive new technologies for people is more important than this debate, and therefore we will win on that class, right? But secondly, they might talk about how these venture capitalists might really be bad. We don't think this is actually true. We think because of the rise that uniquely exists on our set house, there's likely to be massive number of different venture capitalists for the reason that this is rising and for the reason that it's like there's this like loop of success in which it's perceived to be successful and there's like to be a flow of new venture capitalists coming into this area, right? This means that one, there's like to be competition among these venture capitalists of which can have the better choices, for example, which can give the best loans, for example, and expands the choices of these companies to choose venture capitalists at the point in which they have really successful ideas. And therefore, on the comparative here, we're able to have more like equitable venture capitalists venturing into these venture capitalists funding these companies, and therefore we see all these harms that they might propose are far better on our side. When the comparative is there's only one selection of, for example, venture capital that you can like rely on, for example, or you can only rely on the pre-existing institutions and banks. There is no selection process that happens, and therefore the harms that they might propose are far worse on their side, right? So firstly, on why innovation happens far better on our side. So what changed because of these venture capitalists, right? You would say that firstly, the money that people are able to get is far different on our side and on their side. When they have to exist, we have to like rely on pre-existing institutions such as like banks and stuff. This wasn't likely to be like creating innovation in the first place for the reason that one, many of these institutions or pre-existing institutions like banks are very risk averse to the point in which they are pre-existing institutions and their main incentive is not to gain like large amounts of capital from this risky investment in the first place, right? But secondly, on our side, because of these venture capitalists flowing in, they're likely to fund more variety of people and less limitations on the people that they're able to fund. For example, there's traditionally people that are locked out of the access to this kind of loans, for example, or access to the kind of like funding and money on their side at the point in which there's this only one, there are a lot of choices for people to be able to like get money from in the first place, right? This means that on our set house, firstly, there's like to be far more money that is flowing into these, startups in the first place. But secondly, there's like to be increased number of people and number of diversity of people being able to like start startups in the first place at the point is there's like to be a diversity of capital that is flowing in, diversity of investment that happens on uniquely on our set house, right? So why is this really good? We would say that the first premise here is that many startups in and of itself want to make new innovative technology, for example, for the reason that one, the motivation behind starting a startup many times is to create new technology that doesn't exist in the world right now. But secondly, they're obviously going to profit from making new things because now they can exploit a new market. For example, they're able to make new things that can sell in the market right now because now they're able to make newer things that people enjoy, and therefore people now are actually have an incentive to buy the products that, for example, startups create in the first place, right? We would say this is uniquely possible when innovation happens on a large scale for the reason that the initial investment that innovation takes is very huge. For the reason that one, trial and error of research and development can many times need a lot of money, in which you aren't sure if the product is going to be successful, and therefore you need lots of money to be able to trial and error the technology in the first place. But secondly, many times you need people and resources to be able to come together in the startup so that you're able to have enough people and brains to be able to create this new technology. On our side, right? At the point in which these VCs now fund these places, they have the money to actually be able to offset the initial investment that they need to make this innovation that happens uniquely. On their side, this is impossible because these initial banks are unlikely to fund this kind of risky business, but also because many people are locked out of this funding in the first place. So why is it so important that innovation happens on a large scale? The first implication here is that innovation of technology implies that many people are going to get newer services, for example, newer technology that is going to benefit their lives in general, right? So therefore, it's just generally good that you get newer technology, for example, that you're able to access things that make your life better. We think this is something that is important. But secondly, we would say it's especially important for people that never had the kind of technological access to, like, for example, minority individuals or women, right? This is, for example, things like femtech that was newly developed by startup companies for the reason that they want to exploit new markets. These kind of technology that these people never had access to, because of a lack of innovation, these people's lives are increasingly far better when, for example, you have apps that can, track your periods, for example, things like femtech that is newly developed within these startups that uniquely benefit these people's lives, and therefore innovation is great. So the second main argument on the pressure on pre-existing companies, we would like to note that the comparative here before these startups prosper was that the monopoly of companies, for example, especially in things like tech sectors, existed really, really strongly within India. This is simply for the reason that the growth and development speed to develop these countries has to be dependent on the building up one company, and for that company to be successful. A great example here is like Tata, in which they're able to monopolize the entire tech industry in itself. Before I move on, yes, CEO.
All right, so as the info slide says, presumably there are a lot of layoffs. So how do you actually offset these empirical harms that exist in these systems?
Yeah, I think I'll just explain that right now, why the comparative is far worse, right? So what are the problems of monopolies happening? Three things. Firstly, obviously, they're able to raise their prices and get away with it at the point in which no one is able to opt into other options. They don't have the incentive to lower their prices because they do not have any competition in the first place. Secondly, they have lack of innovation, lack of incentive to innovate at the point in which they can just rely on the pre-existing products that they have. And it's because these innovations can be risky, they do not want to offset that money, and therefore they're going to not do any innovation. But thirdly, we would say things like working conditions within these companies are likely to be bad at the point in which they understand that people are unlikely to opt out of their company, because to have a successful career in technology, the only option that you have is to go to Tata, for example, right? This means that because they understand that people aren't likely to leave their company because this competition doesn't exist, these people can treat these workers terribly because they know that because people know that they're irreplaceable, people are unlikely to opt out of their company, and therefore they're still unlikely to happen. Things like labor unions are also unlikely to succeed because the collective action problem exists, in which you have competition with other people, and therefore you do not have the incentive to opt out of this company with no other alternatives. Why do we change this? Firstly, we create the fear of competition because coming in these bigger companies, meaning that they have more incentive to innovate, to create actually new products. Secondly, they do not jack up their prices or create bad quality products because they know that they can be taken over by other startup companies in general, and therefore the innovation that happens within these companies are also better because of the existence of startup companies in general. But secondly, they understand that people might leave, meaning that they have incentive to actually improve their leave conditions so that the best engineers, for example, within their company do not leave, because that'll be a really big loss to them, right? This means that they have the incentive to actually get better working conditions, for example, and therefore improves the people's lives within these companies as well. We have comprehensively proven to use that startups the unique way in which we're able to create innovation, but also better utilitarian benefits for people in India. Proud to propose.
I thank opening government for the speech. I'd like to call opening opposition to give the case from side office to continue the case.
Can you hear me? Can you hear me?
Yes, we can hear you.
Okay, thank you. All right. I'm going to start my speech in 3, 2, 1. Previous speaker says this debate is not about venture capital in general, but specifically about the rise of venture capital. I agree with it. That's why I'm going to firstly talk about what the rise of venture capital means. The rise of venture capital means that the venture capital in India becomes more mainstream over time. It obviously accompanies things like more venture capital existing in places like Mumbai, but at the same time, more media coverage, more investors looking at venture capital and what kind of startup companies that they're investing into. So that is why they're far more likely, more people and more media are far more likely to look into the financial reports that come out of companies like Zilingo, far more likely to look into the accountability, far more likely to hold these companies accountable in the instance many layoffs happen. The reason why many layoffs are happening in the status quo, as the info slide suggests, is because the rise of this venture capital is in the ongoing process today. As time goes on and more media scrutiny is going to take place, more people and more investors are going to watch over to the behavior of these startup companies. These things are going to substantially decrease. In fact, what they say is their case is our case in this debate. So that is a quite simple reason we win the debate. Firstly, I want to talk about how venture capital operates, and then secondly, talk about why traditional financial institutions just horrible. One, venture capital. I want to note that the entire government bench or the opposition bench is just premised on incredibly convenient characterization of venture capital that they want so much risk and they want to invest in like scam, essentially useless businesses. They don't do these things to begin with. I think that's a too like unrealistic, characterization without any backed evidence or like reasons as to why that's the case. I want to point out what BCs do specifically when they want to invest in startup company, because as leader of the opposition concedes, startup companies are not in the conventional sense profitable, at least in the short term, because companies like Tata probably have a lot of the funding, probably have more market capacity, and therefore they're going to lose in that competition. The way for smaller startup company to actually break through that incredibly saturated market is to find new market, as we described from NASA. Things like for instance, market that specifically tailors to the preferences of minority community, like for instance Islamic individuals, that tailors to the culture, cultural practices of like Islamic community. I don't know, like these kind of online businesses can exist, but at the same time, secondly, to use technology as a way to reach to the traditionally inaccessible types of market. For instance, the good example is Meesho, as implied in the info slide, which is that this company actually invented like online market where like people can use app to purchase or sell secondary goods and services. What this essentially allowed for is that the people who would otherwise have gone to local supermarket purchasing a lot of the products, or have gone to local meeting of this community purchasing some products from neighbors, can now have access to online internet, can now have access to this particular platform, therefore have more freer access of goods and services. And that is the thing that we allow for in this debate, because these things uniquely is not going to tap into the existing, is not going to be in direct competition, but still allows for more markets to, for more markets and more profits to be made in this debate. And that is an important way in which venture capital actually invests. And a lot of the times, these people start up companies who have really good ideas of being able to profit in the long run cannot actually, do these kind of businesses because of lack of capital. I actually want to here talk about traditional financial institutions. Sorry, my structure of this speech is horrible. But the reason why a lot of people are not able to have access to things like banks are for three reasons. One, bank oftentimes is incredibly risk averse. Relatively simple reason that a lot of the individuals working in bank obviously want to get promoted in the future. So, but if like someone defaults on your loan, obviously your future capacity to be promoted is substantially lower. And what this essentially means that if you're coming from a minority community, if your credit rating is relatively low, people are not going to give you money. People are not going to give you millions of dollars for the startup businesses. But venture capital uniquely does. If your idea is innovative, if your idea is seen as having some kind of potential, that is a unique delta in this debate. Secondly, oftentimes banks are tied to the big monopolies in existing corporations like Tata, as they say. Tata is a really big company in India, and that specifically creates a bad incentive. Insofar as Tata loans enormous amount of money from banks, therefore banks owe enormous amount of like a lot of the or a large part of their businesses to Tata. Obviously, any kind of new startup company that is directly antithetical to the interests of Tata, that can eventually threaten the competition and the market capacity of Tata, is obviously going to be denied access to the banking credit on their side of the house. Thirdly, they don't have like know-how of monitoring or regulating the behavior as we described. Obviously, as written in info slide, venture capital can and constantly do things like regulating and monitoring of the business operation of these startup companies. That is available because uniquely this is the venture capital that they have know-how. So all of these reasons demonstrate to you that it is much easier for a lot of the individuals who have really innovative idea to have access to venture capital, but at the same time also means that the rise of VC also means that more VCs are going to come in. And here I want to note about an important implication of this, which is that more venture capital come in, and that means that people who have really good ideas can now actually have more leverage, because many VCs want to invest in that businesses, and if that business idea is really, really good. And that means essentially the exploitation that I think closing opposition would probably talk about is probably not going to happen insofar as the natural competition exists in the long run. Moreover, to the point about venture capital and startup company. So startup company, leader opposition say startup company is just really, really unsustainable. I think firstly, incentive-wise, this is just quite unclear and this doesn't make sense. Like Zilingo, they say Zilingo is going to, lower prices in the short term for the sake of capturing market in the long run. I think this is obviously a good thing because, you're able to capture the market in the long run. Actually, this is a really good way of making sustainable businesses under their side, like even under their example. But secondly, why is it bad to have unsustainable businesses to begin with? Because I would know that a lot of the crisis or like a lot of the risk that they talk about is actually not a problem in this debate. Why is this the case? Because economic crisis or like sudden shock in the economy is not the product of of the risk in itself, but rather is the product of mispricing of risk. So here's 2008 financial crisis, for instance, happened not because of the risk of the mortgage, but rather the mispricing of risk. Many people thought that the mortgage was relatively a safe bet, but it turned out to be risky. That is why economic crisis happened, but it doesn't happen insofar as people already know the venture capital investing risky thing. People already know that startup companies have relatively large risk. Therefore, people are going to plan their financial plan accordingly. Even if they, for instance, invest a lot of money onto startup company, they're obviously going to have cushion capital necessary to deal in the instance where these companies go under. But also in terms of workers, right? They say workers are going to get laid off. Again, same reason apply here. These people now know, obviously know that these startup companies are relatively risky. So they obviously have obviously going to be, get some kind of alternative jobs in the instance where these companies are going to go under. So obviously you can cushion the shock that happens as a consequence of these businesses being unsustainable, but at least in the short run, we substantially increases the number of these corporations, more innovation under our side of the house. And by the way, I also want to know that the point about breaking monopolies still stands in this debate, because all of the reason that they gave as to why Tata is so strong is at best mitigatory, but our point still stands, and that these new market and the capture of new market by the startup company also is going to threaten the business model of Tata as a whole. So for these reasons, I am so proud to stand on opening government. Thank you very much.
I thank opening government for their speech. I'd like to call opening opposition to continue the case from side opposition.
All right, starting speech in 3, 2, 1. 1 second, my timer didn't start. Starting speech in 3, 2, 1. Opening opposition says monopolies are better employers because they give you benefits, insurance, medical aid, better pay, and they follow laws. It is currently 1:35 a.m. in Seattle. Jeff Bezos just woke up from a nightmare, sweating, imagining that this is the actual truth in the world that we live in. 2 extraneous rebuttals before we get into our constructive case. 1, opening government says less investment means fewer startups, leading to less employment in the first place. Opening opposition says working for a failed startup looks bad on your CV. As ridiculous as that may be, I think opening government, it's important to clarify that opening government still takes this, because 1, given that you're literally an employee, I'm unsure as to why you will be blamed for the failing of the entire organization that you worked for. But secondly, also, we think that's relatively better than being unemployed. I think that's also a fairly big blot on your CV. Unsure as to why that doesn't have an equal impact. Opening opposition never tells you what their alternatives are and where such funding would come from, which essentially means they concede to the harm of fewer employment opportunities themselves existing by virtue of fewer startups, which means that OO should lose the opening half clash. Second layer of rebuttal is OO says companies like Tata and Reliance are too culturally entrenched in India, so there's nothing that can be done to challenge them. We agree in that they're old heritage companies. However, we think this is something that's significantly changing now. 3 structural reasons as to why this is true. 1, newer generations are farther away from the post-independence nostalgia of identifying these companies as being the only true Indian companies and thereby associating a part of their national pride with it. We don't think people do that anymore. It's been 70 years since the independence. But secondly, we think by virtue of access to the internet, newer generations have experienced purchasing and being consumers in a completely new way by the advent of things such as online shopping, which has exposed them to newer Indian brands and also international brands, which we think the newer generation has gotten quite attached to. And finally, we think Tata and Reliance are both companies which have now moved away from being directly FMCG companies, which means you don't necessarily see their names in everyday goods like soaps, shampoos, and ketchups. You probably, they go ahead and manufacture things like steel, cement, and lorries. We don't think that makes them particularly attached to the regular people in general. So we're unsure as to why this cultural entrenchment is not something that's going to go away over time. 4 arguments we present to you then. 1, startups get fairer prices. Startups and why people will want to engage in them regardless. 3 structural reasons. 1, pop culture. By virtue of television shows like TVF Pictures and also the glorification of hustle culture that we see online, we think more and more people are interested in going ahead and exploring startups as a potential future option. Secondly, socioeconomic conditions. We think particularly in developing countries like India, causes such as poverty, unhappiness with your employment conditions, as well as just paucity of specific commodities that you think can benefit society today, go ahead and encourage people into directly partaking in creating startups in the first place. But thirdly, legislation legislation and policy, Modi's Make in India policy, Atmanirbharta, and the stress that he's put on it over the course of the last 2 years, go ahead and pedestalize startup culture so as to ensure that more people are encouraged to go ahead and participate in it. We think this has net created a positive perception of what startup culture looks like, which means more people are looking to quit their jobs and be their own bosses, build on an idea, develop it, and so that eventually they can see it come to fruition. The reason why this becomes worse on opposition side of the house is because higher number of startups get funding on our side of the house because there is a rise in the number of VC capitals, right? We think that this essentially means that there is a greater interest amongst individuals on both sides of the house to go ahead and come up with startup ideas, quit their jobs, and still go ahead and invest some amount of their time and resources in it. It's just that nobody takes up these ideas on opposition side of the house because there just aren't enough VC firms to go ahead and take on as many startups, right? But note that this is different from what opening government says, and this is how. We tell you that startups get exploited on our side of the house by, this looks like either these few venture capitalist companies having the higher bargaining chip when it comes to the negotiation table. They want to go ahead and buy the majority of shares within such companies, or go ahead and heavily devalue the companies in the first place, right? Which means this, you're not just losing out on people being able to start startups, but the people that actually do manage in succeeding startups on opposition side of the house. The problem is they're most likely going to be exploited and eventually cheated of the profits that they rightfully so deserve, which means that the reputation of individuals that go into creating startups is that you're probably going to get scammed in the longer run, which means the incentive to even have startups in the first place is something that's significantly likely to decrease. Opening government tells you that this is because you're worried not enough people will want to fund you. We tell you it's so much worse because you know that even the people that will fund you are likely to cheat you off of the money that you have, which is why it's worse. Secondly, on the heterogenization of the industry, we tell you that there is an increased diversity in investments, and just because VC firms directly compete with one another, therefore are looking for niches to engage in. Opening government tries to say this but gives you absolutely no mechanism for it. Let me prove to you why this argument is important first and then the mech. We think that not only, like what opening government says, not only do you have greater investment in terms of higher risk, but what we uniquely tell you is we have greater investment in terms of quality, diversity, and engaging in taboo subjects. We think with the rise of right-wing conservatism that we've seen in India since 2014, we think it's really important to have venture capitalists that are going to go ahead and invest in firms which directly clash with the zeitgeist of the time. What do we mean by this? The first push for menstrual cups to be used as hygienic for women in India for the first time was something that was done by an international startup, right? A startup based out of India, which was funded by an international organization. Licious, which is currently a meat delivering company in India, is exclusively funded by international investors, specifically because nobody wanted to go ahead and fund an organization or an enterprise like this in India, a country which prides itself on its Brahmin vegetarianism, right? And this is specifically because there exist these niche markets within the country which nobody in the country wants to tap into because it makes them look like the anti-nationalist as the government would have gone ahead and termed them, which is why it's so important to have unique international investors within the sphere. Thirdly, this is an important challenge to oligarchic industries. OG says this idea, but they never have a mechanism for it. Elo is right in pointing out that no one startup is going to go ahead and undo 100 years of monopolistic corrupt corporations, particularly when they have a nexus with the government. However, we think venture capitalist firms own several companies, right? Which is why when corrupt governments want to push for labor policy or any industrial policy which is against the benefit of several of these corporations, they immediately have a greater incentive to push back against the government. As opposed to independent startups, venture capitalist firms have significantly more social as well as economic capital to push back against the oppressive government policies, therefore keeping such monopolistic nexuses within check. Fourthly, industry standards and endemic problems. We know CEO is going to say this because this was their POI to OG. Yes, the info slide tells us about mismanagement and layoffs. However, we think these are growing pains of a new industry. Keep in mind, startup culture is only 5 years old in India. We think that when an organization like Swiggy underpaid its riders, Dunzo came in despite being the most expensive in its industry, got just as much success because the riders left companies like Swiggy and switched over to Dunzo simply because Dunzo paid more, right? We think this kind of competition is likely to keep such mismanagement in check, and there are structural reasons for the same. We think that these companies work independent of one another and are not oligarchic in nature in a way that a lot of large corporations are, simply because they cannot be, right? They have to work on their own development first so that they can set industry standards. But secondly, we think no startups are big enough yet to go ahead and set industry standards in the first place. So it's not like if they start exploiting workers, everybody else is going to be like, oh, fuck it, they did it, we can all afford to do it, which is why we think workers are better off on our side as well. Very proud to propose.
I thank closing government for their speech. I would like to call closing opposition to continue the case from side opposition.
Hi, am I audible and visible?
Yes, you
we
are.
can see.
Okay. Yeah, if you have POIs, please put them in the chat. I'll try to take one before 6, but like if you put it in like 5:55, I might miss it, in which case I'm sorry in advance. Okay. 2 points from closing opposition. Firstly, why we think that the quality of business is likely to decrease on their side, and secondly, why venture capital is more susceptible to asset bubbles, and why that means that the most vulnerable stakeholder that Gov wanted to protect is likely to be harmed, and why that also means that a lot of benefit that Gov wanted to purport cannot exist on their side, precisely because of the volatility and unsustainability of this particular system. So in that regards, we're going to be different from our opening, because opening mainly talks about like unemployment and like, long-term business, whereas we're going to talk about how this actually, influences the on-the-ground investors and how like institutions suffer from the economic crisis, and why that also means like a lot of social like changes that CG also wanted to conveniently rehash in this debate is unlikely to stand. First question then, why do we think that the business quality overall is likely to decrease on their side of the house? Note that capitalism, or I think the way in which investment works in capitalistic system, is based on things like speculation or the prospect of that business. So that means that the investment is not based on the actual outcome of these startups, but it is rather based on the expectation that startups can receive certain benefits at the end of the day. What does this mean? Two things. Firstly, VCs don't invest in business that are definitely good in the long run, because there's no way that they can verify that. So therefore, it's usually that these VCs review things like business plan, and therefore they just decide to invest in these startups based on the prospects of these things. To the extent to which that is true, when DPM very outright says that, these VCs are not necessarily that risk averse, which already goes to show that a lot of these VCs end up investing in a very volatile startup that seems like they might succeed, but they cannot guarantee that. Secondly, when they characterize these startups as if which they engage in more niche markets, or for example, new technology in itself is also quite volatile, or you cannot measure the exact sustainability of this technology. And the best example that I can give is things like blockchain technology that we thought that it was very good, but it was not, right? So what does this then mean? This means that government needs to accept the trade-off that these volatile, unsustainable institutions are likely to get a lot of funding on their side, to which I think that is quite harmful, because the instability that is likely to derive out of that means that these companies who end up receiving these monies, they want to become unicorn, which means that startups expand their business too much, even if they have things like budget deficit, because you think you can receive VC funding, or you think you can continue to receive these VC funding despite the budget deficit, which in the long run, if these VCs pull out their investment, that's when they cripple down, which is the crucial mechanism that we give you from closing opposition. So why then do we think that venture capital is in this regard more susceptible to asset bubbles? Because I think that crucially, VCs largely lack things like transparency and accountability, because VCs usually are the ones that are like foreign capital corporations, as CG characterized as well. Like, for example, if that is the case, that means that the informations are hugely asymmetrical between these VCs and startups, right? So therefore, when opening government gives this lofty mechanism that we can monitor these VCs, I'm unsure as to how Indian corporations and startups can literally monitor and surveil these institutions that are from developed Western nations. I really don't think that the ability to infiltrate exists on their side. But also note that VCs incentive is not to invest in long run, but it's rather that they invest in these startups, and the point in which they become unicorn, they pull out this investment and walk away with their interest benefits that they were able to accrue as a result of that. What does this mean? This means that this is very similar to things like crossover fund, where usually they pull out after having surplus of interest. What does this mean? This means that on their side, this VC investment is likely to look like something like a hot money, in which things like quick and hasty withdrawal is more susceptible. When OG tells you, therefore, that VCs care about long-term sustainability, this is a false characterization, because because of all the mechanisms that we told you. So sure, we're going to accept the trade-off that you might have net amount of money in short run, but we don't think that this is sustainable on their side. So what does this mean? In a short run, the point at which you have a net amount of money, this is likely to benefit the rich elite of VC executives or people who start the startup. But on the long run, the point in which these things busted, we tell you that this hurts the most vulnerable disproportionately, because the point in which bubbles pop, that's when even those Indian local corporation executives or board of directors are likely to get the disproportionate degree of harm. And I think that this is quite important because the point in which one startup that was receiving VC falls down, this means that this is likely to lead to things like ripple effect in which overall economy or local business that were depending on these institutions and retail investors that were investing in these startups are also likely to fall as well. The weighing here is basically this. The beneficiaries are likely to be things like VC managers, which are number one, not necessarily Indian, but secondly, they're already like elite. I suggest that therefore people who get harmed on their side are the most vulnerable individuals. And the likelihood of this is that VCs and investment chains are linked with one another. So if one gets fucked over, a lot of other things are going to get fucked over as well. What then did OG say? OG says that, hey, we can have media scrutiny, which I already told you is unlikely to happen because it's for an institution. But secondly, oftentimes like these VCs pulling out isn't something that you can directly hold as accountable, given the fact that these are just business decisions that I pulled out investment because I don't think this is something that we want to do. That's oftentimes what these institutions say. And therefore, I really don't think that the extent to which this media scrutiny can be influential. I'll take a point from OG.
So as we already illustrated, the economic risk that you guys talk about is relatively mitigatory, in fact, because people already expect VCs and startup company to be relatively risky. They have cushion capital, whereas our point on innovation and more, breaking monopoly is a tipping point in this way.
Right. So people expect VCs to stay, but they don't because of the fact that it's in the interest of VCs to pull out their investment, the point in which they already have interest benefits or like the surplus interest. Like I really don't think that even if they have cushion capital, they can invest in other like startups in other countries. I really don't understand why they will stay. So what does this then mean? This means that on their side, monopoly is likely to actually get aggravated because number one, if startups fall, then presumably one or two corporations that survive is likely to dominate the market. Secondly, if startups also become the sources of monopoly as well, because the point in which your unicorn corporation, as the info site says, that means that you can poach other startups with their unicorn asset, especially if they also get a lot of investment from VCs. This means that they have overarching leverage to poach other startups so that they do not have any other competitors. But lastly, I think that oftentimes startups are also poached by MNCs or Tata that OG still talked about. So I think that monopoly is symmetric on both sides, which kills a lot of what government side wanted to purport. With regards to things like, hey, at least you have some technology, insofar as monopoly happens anyway, a lot of these technologies likely to remain in high price to the extent that a lot of these things are going to be inaccessible and unaffordable, to the extent to which if it's monopoly on both worlds, we would much err on the side that has a traditional institutions that invest in things that are more sustainable. For these reasons, I'm proud to oppose.
We thank the speaker for the speech. I'd like to call closing government to conclude the case from side government.
Hi, am I audible? Am I visible?
Yeah.
Okay. Starting my speech in 3, 2, 1. Closing opposition's case of bad VCs that socialize losses and capitalize profits is exactly why CG wins the debate, right? Because note that Deb gives you a unique frame about how startups and the underlying desperation for startups exists on both sides, which means in their world you have more bad VCs that can go ahead and capitalize on the desperation of potential startup founders and have the policies wherein they don't have the losses, whereas vulnerable individuals have losses. Which means this debate only exists in a world where startups exist on both sides, the need for startups exists on both sides, except they have fewer VCs and we have more. We think that takes out CEO anyway, but I'll be against their claim of bubbles first, right? The claim of bubbles is basically CEO not understanding of how bubbles works, right? Because bubbles are generally harmful in society simply because common people lose out money. This is things like retirement funds and public funds, so on and so forth. The problem with the reason the opposition can't win on that in this debate is because no one is investing their retired money in venture funds, right? Venture funds are run uniquely on like rich people and their money and business investors, and the funds of individuals and the funds the individuals like venture fund collects on its own, which means it's unlikely that anyone else is being affected committed even if the venture capital loses out money. The only analysis we have from CEO is one line saying that, oh, there is a linkage between investment firms and VC firms, without any analysis for why this is true. Two reasons why this is absolutely not true. One is simply because investment firms are like retirement funds and so on and so forth have better investment opportunities. For example, mutual funds or stock market, and this can deliver the like promise in terms of percentage they have to the individuals investing in that firm. Secondly, the kind of risks that CEO can analyze within this debate in terms of startups existing is something that investment firms also do. Therefore, they never go ahead and invest within this, which means even if it is true that CEO is completely right within this debate, the only harm of the bubble bursting is some rich people not having the money that they knew they were investing within these companies, losing out that money. We think on that they lose, right? But this is also a much better response in a way against CEO than what OG gave you. Because OG says, oh, they have weird cushion capital, which is that some money they're just keeping within themselves to allow for this to exist. Unsure like why that's true. We think it's okay if rich people want to risk their money. Unsure why that's bad, specifically because of the benefits that Deb uniquely talks to you about in terms of taboo industry, so on and so forth. Let's move on to the first question in terms of can op have a counterfactual. One, in terms of like just this motion, no, they actually can't have a counterfactual. But secondly, here's why O is completely out of this debate, right? Because they have a garbage counterfactual at DLO about how governments will subsidize these industries in the absence of VC firms. Therefore, they also have good amount of money going for startups. The reason this is so bad is because LO spends a significant amount of time explaining how Modi is taking photos with Ambani. They also analyze the government's work with existing large monopolies to ensure they survive. At that point, I'm unsure how the counterfactual can be, oh, but the state is going to go ahead and subsidize the competition and concomitant demise of these firms. We think at that point, O is uniquely out of this debate, and that also means CEO cannot claim any benefits with these startups having capital, which means at OpWip they have to weigh against our claims of how startups are far more desperate and underfunded in their world. Secondly, on do startups innovate, right? And this is really important because O has a really glib view of the world in terms of startups just being Swiggy and Zomato, and this is echoed in CEO when they can't really weigh against innovation, wherein they think that there is some rich people losing out on the money invested is significantly more important. Right? No, startups are not Swiggy and Zomato, right? It's Procter and Pharmacies that make medicines more accessible for all. It's Unacademy, College Dunia, and Brainly that make access to coaching and education where you would otherwise have to move to another city and spend lakhs of rupees on freely available, right? It's apps like Polymix that like bring the light of like human reason through debating to people across the world. It's apps like Nika and Zivame that are run by women for women and actually benefit them, right? And there are also like startups that we simply cannot comprehend like on a common average reasonable voter level. For example, OpenForm that's making CFD free and more accessible. Agro AI that's helping like farmers ensure they can plan and like plant crops better to ensure to have a better yield, and working across industries to do that, right? We think even if it is true at that point, there is some amount of risk, and it's still better to allow these companies to exist within that risk simply because of the levels of industries they can like benefit, right? But why is this structurally true? One, they're always going to innovate because if they didn't innovate and they just aggregated, then they could never beat the Tatas and Reliance. This is like only true because of opening up business analysis. Because if startups just use the money to like subsidize their bad ideas and then they continue to have bad ideas, at that point Tata would be able to like always outcompete startups. There would never exist a startup because they always have more money. The fact that a startup can exist despite having less money than Tata, it means that they have some innovation that they're bringing, they have some kind of ideas that they're bringing and uniquely shaping the world. But the value of innovation is something that CG uniquely explains to you in terms of real like impact on people. And why is that so important? One, in terms of minority groups, this impacts them significantly more than any policy ever can, because note, policies are always inherent trade-offs between individuals. If you're taxing people more, you lose out on businesses, but you might have more welfare, so on and so forth, right? No, tech is unique in that there's not a requirement for any trade-off, but every individual benefits, which is say the person investing in that startup benefits to a startup, the people buying from that startup now have more competition, so on and so forth, which means minorities uniquely benefit from this. But when Deb tells you that there is a heterogeneity in the kind of startups and there is a rise of VC firms, so for example, women-run VC firms, so on and so forth, it means you have also specifically in a country like India have better use of like taboo industries in terms of individuals who couldn't have access to things they wanted before now can actually go ahead and buy them and can actually shape and reshape the culture, right? Before I talk about like beating hegemonies and why we uniquely do that, yeah, I'll take opening up.
Byju's has literally done vertical acquisitions and acquired companies under it, as we explained in DLO, which means recreating the same problem of monopolies. How is that not symmetric then?
Oh, you got one of my example. College Dunia is giving people assignments for free. And my example beats your example. Like, let's not be stupid, right? Let's talk about analysis. Let's talk about beating hegemonies. And once again, opening opposition just as examples of how Tata can be bad and there exists a culture. CG uniquely beats this because when we talk about how like cultural startup the kind of culture that opening opposition talk about is dying, but also when VC firms rise, they can create a new culture through like their own platforms, right? It looks like using their Instagram influencers to create the idea of like startup culture being important and trying to invest in your local business and local stores. But also secondly, they're using shows like Shark Tank to ensure that people understand what these companies are doing and feel for them as they did as they do for Tata and so on, right? But secondly, you know that culture also competes with real interest. Insofar as we were able to prove to that member club that things are becoming cheaper for people and they're accessing things they otherwise couldn't, we think that they're likely to let go of that culture. Why is this so important in this debate? One, because look, OG just says that opening opposition schemes are mitigatory, except they never really explain why that mitigation doesn't completely beat the case, because insofar as you can't beat existing companies, there is no value to that. Which means when debt proves to you that you can actually break down these monopolies and you can go ahead and create some sort of social change, that is the only way that any gov team is then relevant. Let's talk about risk and then let's talk about workers and risk. Firstly, on worker rights, we have much better worker rights simply because of how logic works, right? The fact that workers have far more negotiation on our side, like member of government explains to you. The fact that look, individuals can go ahead and choose between startups and existing firms. This means they can not only negotiate better within startups for better living conditions, but even in existing firms they can go ahead and say, look, if you don't pay me more, if you don't improve my living standards, I can leave your company and join a startup. But secondly, and it's really important, rise of VCs is uniquely important for workers, because note, opposition's analysis for why workers are treated better is because monopolies care about their image, which means in a world where VCs are competing with other VCs, they also care about their image, and the only way their image is built on is based on how their startups are treating their workers, which means VC firms in our world pressurize startups to ensure that their workers are treated fairly so that their image isn't nullified. Lastly, on risk, and this is really important, note that risk is only a function of what you can get away with and the kind of competition that exists. We prove to you that uniquely is something that is far worse inside opposition's world, right? Literally, the biggest scams in India from HEB, Vijay Mallya, Bombay Stock Exchange, things that are existing firms that knew that they could get away with things because of bad policies. Startups uniquely know that they can't. VC firms, when they're competing, uniquely know that they can't, which means you're likely to have less risky investments, better use of money, and just a better and more innovative world that's helping specifically individuals who are left out through policy making simply because they're a lesser number in the population. For all these reasons, we should clearly win this debate. Proud to propose.
I thank closing government for the speech. I'd like to call closing opposition to conclude the case from side opposition and the debate.
POI is verbally, please. I'm just trying to sort out my seat. Okay, start my speech in 3, 2, 1. On team CO, I think it's very simple. That we want to make a very simple case in which we tell you that innovation is likely to far be better off in closing opposition. But also because we want to tell you that even if innovation is something that we cannot achieve better off, we all live in a more sustainable environment in which it is more equitable instead of simply pursuing the net sum capital gains in which opening government and closing government kind of failed to mention to say as to why it will be properly redistributed. I'm going to talk about that. I'm going to classify my speech into worst case scenarios of whether innovation can succeed, innovation will fail, and lastly about the trade-off of a relatively volatile state versus a relatively safe state that is slow. First of all, general rebuttals to closing government, because I want to pick them out before I move to a bigger clash of debate, which is between OG and the CEO, right? So I think CEO kind of adds on, CG kind of adds on some contextualization as to why it is more likely than opening government. It probably speaking, I don't think that's the biggest delta of the debate, but responding to the rebuttals from their case of the previous speaker, I heard basically that, look, hey, they're making a straw man case by saying that VCs will be the only one who will be losing money, therefore the companies will be losing money or people will be losing money. That's absurd. We're talking about VCs pulling out because they know when to pull out and because they're profit oriented, and the cost of that, therefore, local firms fall down, and this propagates into local industries falling down as well. Second, and then they said, but then actually it's not gonna be bad because only the corporations and their leaders will have their heads flying off. No, we tell you as to why if the unicorns end up failing, this causes massive problems into the local firms or local industries, right? For example, this looks like cooperating companies which work these unicorns. This looks like banks who lend out money because these corporations want to scale up quickly, and if they end up falling down, this leads to a lack of reserves. This leads to what we call a bank run. That's causes just because there is no corporation that only lends out to civilians, normal people versus rich people. I think the problem of bank runs and causing harm to people overall will still exist. We told you how workers will still be fired under their role. Probably speaking, these people can have reduced consumption rate. You will have also people who end up not being able to pull out late in these bubbles and end up being hurt. And these are often people who are minorities, individuals who lack of capacity to know the insider details and who are too late to pull out from the bubble. These are all the people who are getting hurt. I don't think CG can simply say, these problems won't spread out, right? But third, notice the fact that I cannot drop the whole entire case of reverse monopoly for our closing opposition by saying, but monopolies, there's an incentive of these corporations to be nice. They always corporations have good images. This is completely absurd. If that is actually true and corporations care about the image, image, therefore they don't do monopolies, then why the hell do we have a monopoly system and opening government wants to break down? This is a completely absurd argument. I don't think it's likely, but also it's because, like, probably speaking, if you're a local firm, it is far more likely for you to care for your local needs because you might get regulated. If it's VCs aren't controlled by local regulations as much, and therefore there's less of an incentive to care about their own image. All the reasons why is probably CG is out of the debate, right? Let's now move to the bigger clash debate. I'll take POIs later on, but like, first of all, the idea of innovation being possible. I think we're better off than opening opposition, because opening opposition stops the case in this day up, but they're inherently going to be bad. Opening government respond as well by saying, oh, but then isn't there check and balance systems to solve these things out? We told you on CO, it's probably going to be very hard. And I think C tries to latch on this idea of like check and balance existing, but and then OG said it first. So I think I'm going to respond to OG. So OG says first of all, they say as to why there's likelihood of media having more scrutiny, because these are things in which have taken some time. I think, but then at the same time, in the same length, they say, but these are things are innovative. I'm going to tell you a very intuitive case. If something is innovative, it means people don't know, because that's the point. If it wasn't innovative, that's the reason. If it wasn't as innovative, people wouldn't be able to know as much the potential likelihood of benefits. Then the big companies that you see under OG are probably going to do that anyways, right? That's the reason why, as to why people don't know the extent in which it will be successful. That's the reason why there's likely to be bubbles in the processes. So OG can't say to take innovation plus, and they can't take like, people can accommodate it, because look, there's a problem of unable capacities to actually calculate entirely the possibility of success. B, there's likelihood of information symmetry from the people who are in the VCs, who have more information, who have their experts, who have their own hedge fund managers, who are earning their entire salaries on the basis of actually earning these profits, right? These are people who are rich insiders, but also who are educated elites. They have a better capacity to pull up when the bubbles are going into hiatus and going hiatus, and the poor people who are less educated are still who get hype up and buy the bubbles, or end up going to be worse off. Exactly buying into CG's analysis of like how people have all these fantasies about startups, right? That's exactly the reason as to why it is very likely for these things to be on account of to some extent very volatile, but also we don't know the extent in which, because like of innovation, the characteristics of innovation. But secondly, I'll take you like a 6, sorry. So the problem of innovation is basically that in the long run, and so we told you even if innovation is possible, it doesn't mean that innovation is always, and that this leads into a long run innovation system, right? We told you on CO as to why monopolies might be entrenched more under your role, because not only do you have an innovative technology that is able to get some benefits in the short run, but in the long run as well, you're able to then, these companies are maybe winning because they have a lot of foreign capital based off their initial innovative industries. Obviously, the industries you see in the past were also at some point innovative, but because they're able to be successful, they end up using the successful position in order to create a monopoly, right? So this is going to be likely. For example, in the case of South Korea, there's a company called Coupang that ended up having the backing of a startup company, which has had the benefits of having the BCS backed by a German-backed BCS. Therefore, they were able to win a lot of market gains. And this leads to a case in which they might seem innovative, but at the same time, they end up doing this rat race in which they go to the bottom, they kill off the competitors, and because of their own profitability, and then therefore, after they achieve monopoly, they actually have stronger reasons in order for them to less innovate and actually to go on to their go on. But also because of economy, they benefit from economies of scale, because oftentimes these startups use a lot of data. There's a market incentive for them to actually hold on to a monopoly. But before that, sure, POI.
Given CG's frame, your case makes no sense, because startups exist on your world. They have even less funding and are even more desperate. So pullouts are more often. All your impacts of losing jobs are more often. Engage with the better CG, better.
No, we told you as to why the nature of VCS, in addition, additional VCS nature causes the startups to be excessively risk-taking, excessively and transparent. It becomes excessively more likely for these startups to hold on to monopoly in the long run. So that's the comparative here, right? So lastly, I give argument like basically we told you as to why, probably speaking, the people who are hurt are people who have lack of capacity to pull up when the bubbles are bursting. The people who are hurt because of the investment in the banks falling down. We have the people who are hurt because they lose out of the stocks, right? Why are this the benefit? Like, why is this comparative important? Because in the long run, what it use is all these like booms. When the booms are the benefits of booms are taken by people who are rich, and the harms of busts are taken by the people who are poor, right? And things like, for example, institutions like banks, these are things in which are long-termistic. Money can come in and out. Banks can't be automatically traded in and out because it needs time to get trust. You need to have qualified individuals who are working in the welfare industry to be trained. These are things that must require long run things. So even if we are willing to bite the bullet, that's sure, we have more innovation on the government side. It does not mean the distribution of resources is far more equitable. And I think that's the reason why under your world, you have a system which can entrench monopoly, therefore can cause less innovation that helps the minorities you say under government, but also because we hurt the capacity of states to ensure and stability of their own individuals, I think that is far worse off in the world in which not only the rich benefit from the booms, but the poor hurt the earliest when it comes to the bus. For all these reasons, opposed.
I thank the speaker for